I'd like to invite the MD and CEO, Ittira Davis, who's now with us live on the show. Good morning. Strong operational update where we've seen the gross loan book go up by nearly 33%. Now, a majority of the book, if you look at it, is MFI. MFI has been through some pain. So when we look at this 33% jump and then we look at the texture and the depth of the book, what is it that the shareholders, the retail investors, the analyst community should be taking away?
Good morning, Nayanthara. It's good to be with ET now. And thank you for having me. I think that's a very good question because, the microbanking book all around during COVID has seen some stress. But coming out of COVID, the microbanking business is doing very well across the board. And several studies have shown that. So as far as we are concerned, this is a business that we fully understand. And we are able to grow that business. And it has grown a little faster than the other businesses that we have. And right now, that's a very good thing because this is giving us a good level of profitability. And that is something that we can do very well with right now as we come back and come out with one of the most profitable years that we have had so far.
Also joining into the conversation. So given the fact loan growth has been strong at 33% in the quarter gone by, the run rate has been quite strong this year. And in fact, FY23 has been pegged as that year of a turnaround for Ujjivan Small Finance Bank as well. You had earlier guided for a 30% growth as far as loan book is concerned. What are the chances you are going to beat that and it's going to be, let's say, 35 to 40%?
Good morning, Anisha. Yeah, at 33%, that looks like we could be able to do more. But, we had a spectacular third and fourth quarter last year. So to be able to grow very high on that level is going to be a little difficult. So I would say, 30 to 35 is a good range. We have given 30. We should be able to deliver 30 with, for the full year, for the remaining 2.5 months or so.
You can always hope for better things. But Mr. Davis, with respect to the asset quality as well, there is an improving trend that was quite visible over the last few quarters as well. And if I have it right, your GNPL is now down to 5.1%. Plus, we have seen moderation in slippages over the last few quarters. Could you talk to us about how the asset quality trends are likely to pan out in the second half of the year?
Actually, the GNPA has fallen to 3.3%, and we would like to see it coming down even a little more towards the end of the financial year. But I would say that all along, since the last 5 quarters, we've been having a very good collection, and we have been seeing a lot of traction, and that is primarily driven by the economy. The economy is doing much better after it came out of COVID, and that has helped us a great deal in trying to be able to, address the NPA issues. And I think, sometime next year, we will be back to pre-COVID levels. And that is what I hope, the industry is also going to see.
So Davis, morning. Now, at this point, a lot of banks as well are looking to shore up on liabilities, given that your deposit growth is strong. But as a relatively smaller bank, how are you looking at cost of funds and your overall cost of borrowing in this environment? Will that come at the cost of margins?
When the year started, our NIMs was around 10%, and that has come in a little bit because of the interest rate hikes, which we have had to, correspondingly do ourselves on the deposit front. And like always, the deposit rates in an upward rising environment, interest rate environment, tends to lead the lending side. So yeah, we have seen a slight contraction in the NIMs. It's around 9.5, 9.6 right now. And I think that's where, for us, at least for Ujjivan, that's where it'll stay until the interest rate cycle turns around. So we're not seeing any further squeeze right now. We may have to look at increasing lending rates. We increased lending rate once in September, but since then we have not done anything else about lending rates, whereas deposit rates have gone up. So coming into February, if the RBI does raise interest rates again, we may be constrained from having to raise the lending rates once more.
You did speak about your loan book growth as well, but I just wanted to understand, what is going to be the loan mix in the medium term?
Yeah, coming out of COVID again, the microbanking book has grown a little faster than the other loans types of loans in our portfolio. But into the next financial year, we'll try to balance that out and bring the microbanking book below the 70% a little and grow the other books like the secured. I mean, we are trying to increase in that the secured book, which is primarily housing, affordable housing, and micro and small enterprises, with the introduction of gold loans and going back on to deliver on the vehicle finance as well. So it's trying to rebalance the secured and unsecured books.
Can I also ask you an update when it comes to the reverse merger? The last update that we have is that it should be completed by September 2023, all on track?
Yeah, I mean, we are still aiming for that, perhaps earlier if possible. But we are waiting for approvals from RBI and SEBI. And once we have that, we can formally approach NCLT and get the final stages in progress.
And for those who are tuning in right now, why is this reverse merger being so crucially watched out? Let's ask the man himself. Explain it to us.
Yeah, the reverse merger, we have two entities, the holding company, which is Ujjivan Financial Services, and the bank, which is Ujjivan Small Finance Bank. The only operating company is really the bank. So having two entities, doesn't really make sense in the long run. And, now that we have finished 5 years and have met all the conditions laid down by the RBI, a reverse merger is a more efficient approach, and having a single entity with all shareholders holding directly the shares of the operating entity makes a lot more sense. And I think that is the move in the right direction.
Okay, Mr. Davis, we'll let you go on that note. Thank you so much for joining us.